Good morning and welcome. You're tuned into Market Cafe. You're on ET now with me, Lisa Fernandez, and with me I have Vinny Motiwala. Very good morning to you, Vinny. Well, so after seeing lows after the market closed with a low last week, how is the international handover coming in? Is it like favoring the Indian market?
So seems like it at least. As of now, yes, the Nifty implied is indicating a muted start. But when you're looking at the US markets, look at the Dow Jones. More than 500 points in terms of gains that they've seen coming in overnight. They start the week on a positive note, and 3-day losing streak is what the Dow Jones gave up as well. So yes, positive signs as of now seems like at least coming in from the international market. Dow Jones up more than 500 points, S&P 500 up almost 1% as well, more than 1%. Nasdaq too up more than 1% as well. And let's not forget, this is the bounce back is coming in S&P 500 as well as Nasdaq after it fell last week in that correction phase last time as well. So keeping an eye out on that one. Now, what is interesting also in US Treasury yields, they part some bit of the gains, as Treasury Department said that it expects to borrow 776 million is what they highlighted in terms of the 776 billion in the final 3 months of the year. That is lower than the roughly the targeted of the amount that said was 800 billion, which was something that they were targeting. So it's lower than that. That's why Treasury yields part some of their gains as well. Other than that, there's a very important event that will be happening as well in terms of a lot of events that we are watching out for this week in the global markets. One is the Fed decision that you're keeping an eye out on, Apple earnings, the job data, all that does impact the market as well. So that is something that will keep the market up us as well. And what mainly drove the markets yesterday, the global markets, was that the worry that everyone had in terms of the Israel-Hamas conflict and the war that is going on, that did not involve or bring in more of the combatants is something, or more of the other regions is something that is a bit of a relief over the weekend. That didn't happen, and that is why a bit of a relief move coming in, helping the sentiments on the positive side, at least for the global markets as well, and recovering from the losses that we saw coming in last week. So let's keep an eye out on the US market specifically and the Indian markets, how they actually open up, because Fed's decision is going to be an important one to watch out for as well. Other than that, let's look at the European markets, what they did as well. European markets which closed earlier than the US markets, but that was also on a positive sentiment note as well. They closed higher despite those tensions that were going around. German economy also saw a bit of a contraction, but DAX, FTSE as well as CSE, all of them managed to close with gains in between 0.2% to 0.5% in trade. So let's keep an eye out on the global markets. Seems like a bit of a positive handover coming in there. As of now, Nifty implied is indicating a muted start for the Indian markets, Lisa. But, obviously crude, that's also a factor that comes into play, right? Because crude, gold, all that crude was increasing. Gold was also seeing the demand trends coming in, increasing gold, safe haven. How is that shaping up today?
Right, Vinny. So like you mentioned, the Israel-Hamas war, it had a limited impact till now on the crude prices. But the World Bank, they have come out with a report and they say that if the war escalates, then it could provide some dual shock to commodity market, because they said although it has been limited so far, but it could push the global commodity market into uncharted waters, because if it sees the prices gaining ground, and it has created some scenarios. And in a case of small disruption, the bank estimates that the oil prices that could rise to a range of around $93 to $102 per barrel, and in the medium term scenario, it also sees the prices escalating to even around $120 per barrel. So that's the word coming in from the World Bank. And of course, along with the Middle East concerns, we also have the Fed rate decision. Mostly it's being anticipated that Fed will keep the rates unchanged. So let's see how it trends. For now, after seeing a fall, oil prices have steadied at around WTI crude prices that has steadied to around $82 per barrel, while Brent crude that is at around $88 per barrel. So we have to keep an eye on these levels. But even gold prices, that is hovering at at that $2,000 per ounce level. So because it's considered a safe haven during these uncertain demands. So yes, it's largely consolidated at that range since the past few days, Vinny. So that's largely what's coming in from the crude as well as the commodity check.
Absolutely. Crude and commodities as well as global markets. Yes, keeping an eye out on that one. Important to watch out for over there. But let's look at the important cues that do come in and what we're watching out for this morning as well. India fiscal deficit data, that's something that we're watching out for. Other than that, let's watch out for the China composite data, manufacturing data, as well as today we'll be having the US CB consumer confidence data that will be coming out as well. That's, on the broader data point front. Now, in terms of what earnings you're watching out for in terms of the domestic, Nifty companies like Tata Consumers, we have L&T, that's Larsen & Toubro, as well as Bharti Airtel that will be reporting their numbers on the Nifty front. Other than that, IPO action, right? We do have a lot of IPO action happening. One, the lock-in period firstly of the IPOs will be opening up for Yatharth Hospital. But other than that, in terms of IPOs, let's watch out for Honasa Consumers. They are opening for subscription today. They are the parent company of Mama Earth, so yes, they will be opening for subscription. We had Cello World, which came out which on the first day of their subscription, that was yesterday, saw 38% of demand coming in for their IPO. Other than that, in a lot of corporate action that we are watching out for as well, let's keep an eye out on Birlasoft interim dividend. Aarti Surfactants also something that will be coming out with partly paid up shares. So keeping an eye out on all that as well. And important other events that one should watch out for. The top court is going to be hearing some arguments in terms of validity of the electoral bond scheme, as I also heard the government appeal for imposing higher tax on online gaming companies. Keeping an eye out on updates on that, as well as NCLAT will be hearing the challenge by IDBI Axis Finance against Zee Sony merger as well. And lastly, we have Bombay High Court that will be hearing SecLink's plea against awarding Dharavi project to Adani Group. So yes, important in terms of that highlights that we are watching out for as well. But that's the key events one should watch out for. But let's get in some global updates, and starting with some of the top headlines this morning. Over 8,000 Palestinians have lost their lives in Gaza since the advent of the war. No signs of a ceasefire as conflict continues to intensify. Israel Prime Minister Benjamin Netanyahu has rejected calls for a ceasefire with Hamas. Meanwhile, Hamas has released a video of captives demanding a prisoner swap while criticizing the Israeli government in failing to protect civilian lives. Israel has in fact, in response, gone ahead and called this video a psychological propaganda. Horrors against the Palestine continue to mount as civilians in Gaza face false choice, as well as either you die in the north of Gaza or be transferred to the south to also be killed there. The Jordan UN envoy has spoken against this as well. Now, Israeli attacks continued relentlessly, which led to the shutting down of electricity in the region. The World Health Organization has also said that it has not been able to resupply hospitals in northern Gaza. Time now to hear out word from the Israeli Prime Minister Benjamin Netanyahu, the reaction of the ceasefire.
Hamas is holding over 200 Israeli hostages, including 33 children, holding them, terrorizing them, keeping them as hostages. Every civilized nation should stand with Israel in demanding that these hostages be freed immediately and freed unconditionally. I want to make clear Israel's position regarding a ceasefire. Just as the United States would not agree to a ceasefire after the bombing of Pearl Harbor or after the terrorist attack of 9/11, Israel will not agree to a cessation of hostilities with Hamas after the horrific attacks of October 7th.
And tech giant Apple has hosted a dark and spooky themed product launch event a night before Halloween. And ahead of the all-important holiday shopping season, the new chips will refresh Apple's Mac lineup. The new computers, including MacBook Pro as well as iMac models, go on sale next week. And the company has also cut the price of its entry-level 14-inch MacBook Pro.
Tesla shares skid after Panasonic, which is a major supplier for the company, has cut battery cell production in Japan during the period ended September 2023. The company's less positive outlook for its battery segment follows similar warnings by several automakers and suppliers as major economies including China and Europe see a weaker growth.
And the Bank of Japan will be the first with its meeting where it is likely to revise up its inflation forecast. The Fed is expected to leave the rates unchanged at the end of its two-day FOMC meet, and this is after the US economy grew faster than an expected 4.9% annual pace in the Q3. And while the inflation that still remains above the Fed 2% target level, meanwhile, Bank of England is likely to discuss the monetary policy and also decide on the potential future inflation-busting interest rate hikes.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more updates on the domestic front after this break.
Welcome back to the show, and let's see what the Asian market's doing. Let's mark the Asian markets for now. Starting with the China market. So yes, we can see Shanghai. It's trading flat actually with the negative bias, and China's PMI data has come out, and as per the PMI data, it has contracted to 49.5 in September, and this is versus what was estimated at lower than what was estimated at 50.2 as per Reuters. So yes, we can see it's quite mixed, the Asian market. So it's only ASX that is trading in green. It's up around 0.3%, while other markets, Nikkei is also in focus because the Bank of Japan, it's expected to conclude its two-day policy meet later in the day, and investors will watch out for any signs on the inflation forecast, because they are also expected to do some further adjustments to their bond yield. So we could see the Japanese yen also, that also rose to a two-week high. So that's on Nikkei, and as well as even Kospi, South Korea's Kospi, that is seeing large cuts relatively considering the other markets as well. So it's 0.8% down today in the early morning session, and even Hang Seng Index, actually that's fallen the most now. It's around it's down around 1%, and it's trending at around 17,216 levels. So yes, largely a mixed set coming in from the Asian market. And talking about GIFT Nifty, that yesterday it closed at around 19,041 level, and we can see that it's at around 19,216. So yes, it's trading flat. So we can say that it's a muted session coming in for the Indian market, but with a positive bias. Vinny.
Absolutely. But on that note, we're going to slip into a short break. But as we go into the break, let's look at the lineup that is there for the market. A very exciting lineup. At 9:20 a.m., we have Mirora CIO Trust Mutual Fund joining in with us. At 9:40 a.m., we do have KPIT Technologies that reported its numbers yesterday, up to their guidance as well. So let's keep an eye out on Sachin, the president and joint MD, who will be joining from KPIT Tech at 9:40 a.m. 9:50 a.m. to talk about their numbers, we have Arun Kumar, Executive Chairperson and Managing Director at Strides Pharma Science. At 10 a.m., we have Veer S. Advani, Vice Chairman and Managing Director at Blue Star, joining in with us to talk about the numbers as well. And we do have at 10:20 a.m. Anil Yadav, Director, IRP Infra, joining in with us to talk about the numbers. And on IPO action, we do have Ghazal Alag as well as Ramanpreet Sohi, who is the CFO at NASA Consumers, joining in with us. They will be opening for subscription today for IPO. Let's keep an eye out on that.
Welcome back to the show, and we are on that part of the show where we focus on what's happening on the domestic front, the stocks that could be in focus today. Let's start with the Indian IT sector, which could be looking at a decline in the headcount in the current financial year. And for that, we have compiled some data from the biggest IT firms, and the trend is clear because the number of people working at Indian IT firms, that has declined this year, and this decline in workforce, that is happening for the first time in 25 years. And this is at a time when Narayan Murthy, he ignited a debate urging young Indians to work 70 hours a week. But is there enough work for the young engineers this year, or is it time for them to look beyond IT? So we spoke to Rituparna Chakraborty, who is the co-founder of Team Lease, as well as Mahantesh Sabarad, who is the independent market expert, and they have given a better perspective on this. Listen in.
There are two issues that we should examine here. Why is there a shrinkage in the headcount? Is simply because IT industries survive on two things: volume and pricing. Volume is the headcount number is what translates into essentially volume for them. More the number of employees, more is the service deliverable that you can give out in terms of capacity. But if the pricing is not sustainable enough, then what really happens is many of these IT companies are seeing a large amount of deal wins already happening, but the pricing that is coming in is not too lucrative for them to really manage those deals.
For the longest time, and of course for the lack of better options, we've looked at IT as a net employment generator. And now suddenly we see that all changing, and as it must, because technology is if the technology essentially becomes the sole contributor of jobs in a country, it's inevitable the kind of efficiencies, the kind of automations that a technology industry is always constantly pursuing. It's just too much, honestly, in the long run to ask.
And yes, L&T will also be in focus today on the back of its results. So let's see what are the expectations from L&T. On a consolidated Y-on-Y basis, revenue is expected to go up around 20%, and that there will be growth across all segments, especially in the E&C segment, while the margin that is expected to contract to 10.5% versus 11.5% seen last year, and that is because they are going to shift more towards the low margin orders in infra, and also the margin that they saw in defense as well as hydrocarbon, that is expected to normalize. So yes, that's largely on the revenue and EBITDA, but even the PAT, that is expected to see a growth of around 28% on year-on-year basis, and that is owing to the financial leverage as well as lower tax rates. Now the key factors to keep a watch on will be the ordering momentum, especially before election. How is it going to pan out going forward in the rest of second half of the year, and also the competition intensity in the domestic ordering, whether it will have an impact on the margin, the progress on the divestment of the non-core assets, that is the Hyderabad, the Metro as well as Nabha Power, as well as the management's commentary on their new initiatives, that is solar, hydrogen, and what will be the share in their revenue mix as well as order mix. Also, more importantly, is their FY24 guidance, which the management had given last time. They mentioned that they would be giving a revenue growth of around 12 to 15%, and their order inflow growth, that will be at around 10 to 12%, while the net working capital to sale, that will be in the range of 16 to 18%. So now whether the management adheres to this guidance is one thing to keep a watch on, Winnie.
Okay, let's keep an eye out on L&T, but like we said, we have three nifty companies reporting their numbers. Let's move on to the second one, and Bharti Airtel. Samit, what are we expecting this time from Bharti Airtel? What are the numbers expected to look like?
Well, on a consolidated basis, Bharti Airtel is expected to report a muted set of numbers. The revenues are expected to be high by around 2% on a sequential basis. EBITDA is expected to come in 1.5% higher. Margins are expected to come in flat at close to 52.3%, while net profit number would show a sharp jump, but that is because of a lower tax rate in this quarter and because of also exceptional losses that the company had reported in the previous quarter. But the key number to watch out for from Bharti Airtel earnings would be the India mobile business performance, and on that front, the revenue and EBITDA are expected to be 3% higher on a sequential basis. ARPU number is expected to come in 2% higher at around 204 rupees per user per month. The subscriber base is expected to grow to around 34.2 crore subscribers at the end of second quarter. Now, if you see growth, whatever growth we are seeing in the Airtel, in the India mobile business, the ARPU growth is purely on the back of the fact that the subscriber mix is improving for Bharti Airtel, and also in the second quarter there was one additional day which will aid the ARPU number for Bharti Airtel in the second quarter. Now, apart from the India mobile business, the home broadband business is expected to report a healthy growth on the back of subscriber addition. Enterprise business would also see a healthy growth in the second quarter, but the DTH business would see a sequential decline because Q1 was benefited because of IPL. Now, Airtel Africa reported its numbers, and they were pretty much in line with what the street was expecting. Sequentially, we had seen a decline, but that was because of the devaluation of the currency. Now, apart from earnings, what to watch out from Bharti Airtel earnings would be the key thing to watch out for would be the capital expenditure number that the company gives. Apart from that, what is their commentary when it comes to tariff hike, how they are planning to monetize 5G, and how has been the traction for 5G so far would be important to track from Bharti Airtel earnings.
Okay, thank you so much for that, Somit. But let's move on and talk about Tata Consumers. They too will be reporting their numbers. Revenue expected to see a growth of around 11%. Profits a bit of a decline of around 7.6% from the company. While in terms of the margins of the company, we are expecting the margins to see an expansion coming in, and EBITDA margins expected at 14% this time around. Now, obviously, key factors, what we're keeping an eye out on, we're expecting the India beverage business and food business to sustain a mid volume growth. That is the growth that we're expecting there. Salt business expected to see a growth, a decent growth, mainly aided by pricing this time, but the volumes in the salt business maybe could be a bit subdued. Tea business volume growth expected at around 4%. Narishco expected to sustain growth. Let's keep an eye out on commentary that will come in for Starbucks, and international business is expected to see an improvement in terms of the margins of the company. Factors to watch out for are going to be the demand environment commentary, both out of home consumption, how is that increasing as well, and in terms of the tea and coffee prices, the raw material prices, have they sustained, because that does impact the tea business India volumes as well sometimes, and even in the US coffee business as well, which is seeing an impact sometimes because of the coffee prices. So key to watch out for is that as well. These are the key highlights that one should be keeping an eye out for from Tata Consumers this time around, Lisa.
Well, Vinny, it's 31st and it's that time of the month where, the auto numbers, they are reported. So let's look at whether the numbers will be better this time owing to the festive season. So yes, it's being largely expected that the robust festive sales that is expected to drive the numbers for auto, and the festive push will boost the retail sales, especially in the PV as well as the two-wheeler segment. So the big trends that are being observed are that in two-wheelers, the dealers are indicating a return of the entry-level customers during Navratri, and PV also the passenger vehicles, they reported healthy sales, and this is owing to the discounts, especially in the entry-level segment. So if I look at the PV segment, Tata Motors is expected to report good growth of around 5% compared to the other players. M&M as well as Maruti Suzuki, they are expected to see a flat growth of around 1 to 2%. While talking about the CV segment, that is expected to see a month-on-month decline, and this is owing to the strong base. So Eicher Motor, Tata Motors, CV as well as Ashok Leyland, they are expected to see a decline of around 6 to 9%. And moving on to the tractor segment, festive demand, that the retail sales will remain muted. So M&M Tractor and Escorts, that will see a year-on-year growth of around decline of around 13%, but for a month-on-month basis, M&M, that will see a growth of around 4%. And talking about two-wheeler segment, that will see good growth. Hero Motor, Bajaj Auto, TVS Motor, they will report a growth between 7 to 9%. So that's largely what's being expected around the auto sales, Winnie.
Okay, Lisa, but let's keep it to the auto sector then, because TVS Motors reported their numbers as well, and when you look at it, it's an inline set of numbers that came in from the company. Let's talk about some of the key highlights there. One, obviously, revenue saw growth of 13%, margins saw an expansion of around 80 basis points, while profits of the company saw a jump of 32%, which was mainly due to the higher other income, which supported the profits of the company. Higher other income came in at 46 crores this time versus 1.4 crores last year. Now, other than that, what you're seeing in terms of key highlights coming in from the con call is that the growth in exports, the management said, is likely to sustain. Raw material cost is likely to remain stable going forward as well, and subsidy not on losses are likely to continue to the next 8 quarters as well. For the next 6 quarters as well, 8 quarters is what the company highlighted. For FY24, the capex has been planned at around 1,000 crores and an investment of 900 crores. These are the key highlights coming in from the con call. Other than that, the demand outlook, they said the festive demand has been robust, supported by urban demand. Rural demand still continues to be a bit muted. And EV scooters, TVS iQube production has increased to 25,000 units a month in the month of October, and further is likely to ramp up in the coming quarters as well. On the back of this, Jefferies is maintaining a buy, hiked the target price to 2,000 rupees per share from previous 1,750 rupees per share. They believe the India two-wheelers is recovering and exports improving too, improving higher margins, but high investments are something that is there. But as of now, they've hiked the target price for TVS Motors, so keeping a close eye on how TVS Motors is going to be doing in trade today.
Well, we'll definitely keep an eye on TVS Motors. But with that, let's slip into a short break. And post-break, we'll come back with more stock updates. So stay tuned on the show.
Welcome back, and you're watching Market Cafe on ET. Now, let's keep it going with more stocks that are going to be in focus today. And we have Spandana Smurti that is in focus after it reported a good set of numbers with an improving asset quality. What more are the details? Mamakshi was doing all the number crunching, so let's go across to her. Mamakshi, good morning.
Yes, Spandana Smurti reported a good set of numbers this time around. Let's first look at the AUM growth that has come in. AUM now stands at around 9,784 odd crores, an uptick of almost 69% on year-on-year basis is what the company has reported. And most of this growth has actually come in by the new customer addition. In fact, the borrower base has also grown by almost 24% on a year-on-year basis and nearly 12% sequentially. Now, moving on to the net interest margins, they've come in flat on a sequential basis, standing at 14.1%. The net interest income as a result has also seen an improvement of almost 72.4% on a year-on-year basis. Net profit, yes, seeing an uptick of almost 2.3 times on a year-on-year basis, standing at 116 odd crores. Now, the net profit was actually in turn aided by a very robust core NII growth. Not just that, we also noticed a strong growth in the AUM as well as higher DA income. Asset quality also improved for this counter on a sequential basis. Not just that, but surprisingly, that is the negative surprise that actually came in was on the credit cost, because they spiked significantly to almost 90 odd crores as compared to 30 crores on a sequential basis. Now, out of this 90 odd crores, 60 odd crores is towards impairment pertaining to pre-April 21 book as well as SR. Now, despite higher credit costs, the company did manage to sustain its return on assets at around 5% for the third straight quarter, and they also reported a return on equity of almost 15%. Not only that, the management also guided that they will be ending the year with an AUM of almost 12,000 crores, which largely implies that the guidance that they had given remains unchanged. The disbursements of almost 3,000 to 3,500 crores is what they're expecting to see in the third quarter as well as the fourth quarter. They've already started working on their Vision 2028 plan, and they are going to release it come year end. Credit costs that have spiked of late are expected to come down in the coming quarters, and even the marginal cost of borrowings are expected to improve. So all in all, the commentary from the management does look quite promising. The company has posted a good set of numbers, and that is the reason you should keep an eye out on this counter.
Yes, Mamakshi will definitely keep a focus on Spandana Smurti on the back of good show coming in from there. But you have also tracked the brokerages of the day. So what's the word coming in from there?
First, start off with UPL. We have a brokerage coming in from Jefferies, and they have highlighted that the second quarter numbers actually missed the company, the brokerage's estimates. Quarter two sales were down by almost 19% on a year-on-year basis, while the EBITDA declined by almost 43%. Global channel destocking as well as elevated pricing pressures are being seen, which could negatively impact the counter. Not just that, but however, they're expecting that the second half could be actually incrementally better on a sequential basis, and that is because North America, Latin America, Europe are entering the major cropping seasons, and overall the elevated inventory levels that were being seen are expected to now gradually decline. So given all those factors, Jefferies has maintained its buy rating on the stock, but nevertheless they've gone ahead and cut the target price in this counter from 800 rupees per share to 675 rupees per share. Also keep an eye out on Marico. We have a note coming in from Jefferies. They have highlighted that the continued revenue fall in India business could upset investors. This could be a negative factor that could impact the performance of the stock today. Apart from that, they also highlighted that double-digit GP growth growth could give a fair view of the performance. Growth portfolio is seeing extremely strong traction is what they have highlighted, and they believe that the revenue growth should now turn positive in the second half. So on the back of a good second half, we have Jefferies maintaining a buy rating on Marico with a target price of 660 rupees per share. And lastly, let's also focus in on Bharti Airtel. We have a note coming in from CLSA, and they have highlighted that in Q2, Airtel Africa's revenue EBITDA beat estimate, but the revenue growth was actually hit by Naira devaluation. Africa is seeing rising cash flow as well as comfortable gearing, and overall, when we talk about Airtel Africa's contribution to Airtel's numbers, well, it makes up almost 30% of the company's FY23 revenue as well as EBITDA. So all in all, on the back of Airtel Africa's numbers, CLSA believes that it was a beat in terms of EBITDA as well as revenue, and on the back of that, they've actually gone ahead and maintained a buy rating target price of 1,100 rupees per share.
Okay, Vamakshi, thank you so much for that. Keeping an eye out on Bharti Airtel, surely watching out for their numbers specifically. Let's move on and talk about some of these IPO actions that will be happening today. We have Honasa Consumers, that is the parent company for a lot of brands like Mamaearth, the Derma company, as well as Aqualogica, BBlunt, Dr. Sheth's. All these companies come under Honasa Consumers, and they are opening up for their IPO today. So yes, 31st October to the 2nd of November is when the IPO will be open for subscription. The price band is 308 to 324 rupees per share. And obviously, OFS is around 1,336 crore, fresh issues around 365 crores. So a total of 1,700 crores that the company is looking to raise from this IPO. Mainly, there was an anchor investor book that has come in, 765 crores were raised by the anchor investors yesterday. 49 anchor investors that came in: SBI Life, ICICI Prudential Life, Abu Dhabi Investment Authority, Norges Bank are some of the names that have come in from the anchor investors as well. Let's not forget, in terms of the key highlights that come in for the company, the 3-year CAGR revenue growth is at around 80%. Mamaearth accounts to around 65% of their share, sales, while in terms of the online share, that is also at around 64%. They have the highest gross margins in the industry, approximately 70% in the industry as well, and they are focusing on increasing their offline presence as well. Just key highlights in terms of some of the risks that one should be keeping an eye out on is the lower EBITDA margins, as the ad spends could be at around 40% of the sales. They reported loss in almost 2 out of these 4 quarters, 4 years that they'd seen, but that the company had highlighted that was mainly due to some of the reasons. That was a one-off kind of a situation. Keep an eye out on that, but the concern that everyone talks about is the valuation, because post IPO the company is eyeing a valuation of around 10,000 crores market cap. So that's what someone is keeping an eye out on. And when you compare it just on an annualized rate of the Q1 run rate, the PE comes in at 100 times FY24 forward PE. So that's a very high valuation that someone is keeping an eye out on. But let's listen into what the management had to say. They were in conversation with my colleague Avan. So listen into what Varun as well as Ghazal had to say about the IPO coming up.
From a perspective of the IPO, and it's IPO where we are raising about 370 crores in primary, and some of our early investors are also selling their early ownership, and which takes the overall size of the IPO close to about 1,700 crores. And we have issued and opened the price band today. The price band is at the lower end at 308 rupees, and at the upper end 324 rupees is where the stock is priced at.
All right, and what does that value the company at? Any details?
Yeah, that will value the company at slightly north of 10,000 crores.
Slightly north of 10,000 crore rupees. Now let's talk financials. I'm addressing this question to either of you, so anyone can take it up, because there was that loss of about 151 crore rupees for FY23, and that was largely on account of the rising employee costs as well as some of the other expenses. Given that we have seen your overall costs outpacing your revenue growth, it has affected the overall bottom line. So what's the plan to rein in your costs, and when do you think that you will remain sustainably profitable?
If you had to look at FY23, and we did a revenue of close to about 1,500 crores, which is a growth of 58% over last year. And now in this year, and if you remove one exceptional item of goodwill impairment, which is a business-related expense, but an exceptional item. And if you remove that, we're actually profitable. And our adjusted EBITDA for FY23 is plus 3%. And that in Q1 24 has gone up to 7% already, which is to the north of 30 crores just for Q1. And that's something that we want to clarify, that as we are growing, costs as a percentage are actually coming down because of the leverage that we're seeing in the business.
To talk about the gross margins in the range of about 70%. So do you think that these levels look sustainable in the long term?
Yeah, so Ivan, these are the gross margins that we operate at, and this is what we will continue to operate at in future as well.
Okay, that is Hanasa Consumers, yes, coming in on the FMCG side and consumption side that one should be watching out for, opening for IPO today. But let's move on and talk about another FMCG company, and this is Marico. Marico reported their numbers yesterday. Overall, first cut, when you look at the numbers, an inline set of numbers came in from the company, margin slightly above, not much of an above, but yes, inline set of numbers came in from the company. What was a major surprise that came in was the gross margins of the company. That the guidance of the company has actually been upped because the company management is saying that now they are expecting the gross margins to expand to 350 to 400 basis points. They're confident of achieving 200 basis point margin improvement in FY24. They previously said that they would be achieving around 150 plus basis point guidance is what they'd given before. So yes, a 50 basis point increase in terms of the EBITDA margin guidance that the company has given as well. Now more in terms of the details of the company, volume growth in line, nothing exciting on that front. 3% volume growth led by food as well as premium personal care segment as well. International business managed to see strong growth momentum that continued over there. Parachute registered a 1% volume growth. Value added hair oil, there we saw a 1% growth in terms of value terms. That was mainly reflective, or you could understand from that there's slow recovery that is coming in the mass personal care categories as well, and that is a factor that has been highlighted in the last couple of quarters by a lot of FMCG companies as well who are present in the personal category. The mass personal category is not seeing as much of a growth as much as it was expected. Now let's move on, talk about Saffola edible oil segment as well. That's a low volume growth as well, low single digit volume growth to be precise. And then the company also highlighted that they're seeing a slower growth than expected in terms of the rural recovery that we were expecting. So still a muted rural recovery is what we could highlight as well. Outlook, they remain optimistic in terms of the gradual recovery for the company in terms of the sectorial volume growth. Let's talk about what we are highlighting in terms of the brokerages are seeing this morning as well. Jefferies is specifically highlighting that, the company continued revenue decline in the India business is something that could maybe upset the investors, but the double-digit GP growth is fair representation of the performance of the company, and the growth portfolio keeps seeing strong traction, and revenue growth should turn positive in the second half of the year is what Jefferies is highlighting. So that's why they're maintaining a buy, and they've given a target price of 660 rupees per share. Other than that, we also have a brokerage that's coming from CLSA. They are maintaining an underperform rating. They've cut the target price actually for Marico to 551 rupees per share. Previous target price was 580 rupees per share. What they're highlighting is that the sales and the profits were in line. Margins, like I mentioned, that was the better one that came in. That was a surprise because the upping of the margin guidance as well. But domestic growth is seeing some gradual recovery. International has remained robust, better margin outlook. So that is why they're maintaining the underperform rating, but cut the target price slightly. So keeping an eye out on Marico on the back of that, because yes, as of now, in line in terms of overall the numbers that the company has seen coming in.
And on the market voices that we had on our channel, Vikas Kimani, who is the founder of Carnelian Asset Management, he continues to remain bullish on PSU banks, and also believes that private sector banks, they are capable of delivering good returns in the near term. So let's listen in to his view on various sectors that he is bullish on.
We have all along been very bullish on private sector bank. We continue to remain bullish. We recently, or about some time ago, we also believe that public sector banks offer a great opportunity given the fact that the ROE profile could be similar. Historically, public sector banks had three problems: asset quality, governance, and technology. And on all three counts, they were ceding market share to private sector bank. And if you see, all three have been systematically addressed in last couple of years. First, it was asset quality. Then, we saw governance getting addressed. Most of the IMDs are coming from a very good track record, and also with a 3 to 5 year kind of tenure. And lastly, most PSU banks have spent serious amount of money on technology upgradation, so which puts them at par with private sector. So and most PSU banks are available at below book. So we see that there's a potential re-rating across the pack, especially ones which are run by good leadership and who have invested into technology. So we think that there's a good possibility of delivering better returns in the private sector bank over in a medium term. Power segment is a new change happening in terms of growth driver. You could see significant some interesting ideas there. I mean there's no one specific thing I can say, but I think there is an opportunity available across spectrum. Consumer, I think some point in time, there are interesting ideas emerging when one can look at. One should be ready to sort of explore. We have not bought any consumer stocks in last 3-4 years, but we've been kind of now evaluating very closely that can there be an interesting play out there. So you keep looking at ideas, and but to be honest, right now I can tell you we are fully invested. I mean, we have small 3-4% cash. It's not a lot. So we are not as worried about valuation. We are not as worried about the potential growth which India has to offer. India is seeing a huge amount of capex across infrastructure, private sector capex, industrials. I mean, manufacturing, we are seeing massive capex happening. So, and that cycle is only accelerating. In power sector, we are beginning to see in the thermal power segment, we are beginning to see new hope coming through in terms of new line of capex. So now, earlier there were small capex, size capexes. Now we are beginning to see the new wave coming about in terms of the large scale capexes, and I do believe that that cycle will lead again with a huge amount of push. So you will see that playing out. So, and typically, you play through capital goods company.
Okay, that was Vikas Khemani and his views coming in there. But with that, we're absolutely out of time on this edition of Market Cafe on ET Now. It's a goodbye from Lisa, myself, as well as the team who put this show together. Don't go anywhere. The markets will be back.